Hey, rich friends, it's your girl Cha reporting live from the Money Mantra, and we are back with another Forex education video. The purpose of this channel is to help as many people as possible become independent and profitable traders. So if that's something that you're looking to do, you're going to want to make sure that you subscribe. If you get to the end of this video and you find that it's helpful, make sure you leave me a comment to let me know what you've learned. And more importantly, share this video with another trader who you think that it will be helpful to. If you find that the videos are just not enough, you can find the information for my personal mentorship down below in the description box, or you can also follow me on TradingView. So in today's video, we're going to be discussing a more clear way. Hopefully I can provide clarity to you guys on a more clear way of how to find entry points, how to enter the market with confidence, how to set stop loss and take profits with confidence, because I noticed that this is something that people tend to struggle with. I'm also going to briefly be reviewing how to set market orders, because I know a lot of us are busy, a lot of us still work full-time jobs, a lot of us have families, and it can be really time consuming or overwhelming to feel like you always have to look at the charts. When in reality, you can look at the charts once or twice a week, set your pending orders, and you'll be good to go. So I'll start with looking at NZD USD. Right? Because these typically I like to look at USD pairs because I take a lot of notes on my trading just so I can become better. So these are the pairs where I found the most success, and they also work with my schedule. I'm typically up during the day, so I will trade or let my trades run through the New York session. So when it comes to time frames in trading, because I noticed this is also something that people struggle with. Yes, the time frame, like, to make a long story short, the time frame that you're trading on actually does matter, especially when it comes to finding your entry point. Because if you can understand what the overall market is doing on a larger time frame, all you're waiting for on a smaller time frame is an entry point. So the first thing you always have to do is you have to establish your bias in the market. And this just means, okay, am I going to buy? Am I going to sell? And everything literally comes down to, are you trading with the trend, right? Some people like to focus on reversals, but reversals don't really last that long, right? They don't really last that long. Like, the market is going to have an overall trend. So the first thing I like to do, and I really encourage you guys to write this down and take notes. The first thing I like to do is I like to look at the chart. And what I'll actually do to make this even more clear for y'all, I'm going to hide the indicators, right? I'm going to hide the indicators, and we're going to do some naked chart trading today. Let me move this down in this too. All right, so here we go. Now, if I was to look at NZD USD on a weekly, this literally means that each one of these candles that I'm looking at is going to represent a week. If I ever start breaking up at any time, y'all, just drop some 4s in the chat. And once I'm clear again, you can drop some 8s. And this is so that I know I have to slow down or I have to repeat myself. So if I'm looking at this chart on a weekly basis, I first need to determine, just by looking at this, do I see a buying market or do I see a selling market, right? And you can scroll over if you want, but I tend to analyze only what I can see on my screen unless I have a reason to go back further in the past. Because what I can see on my screen right now is from this current week that just started all the way to May 2020. Like, and I don't really need to go back that far, but sometimes it's necessary, but not right now. So in a weekly time frame, I can see that just by glancing at this, I literally see more red candles, right? So automatically I'm like, okay, this market it's more so selling, right? Now, if you're taking notes, there are 3 ways that you can establish the trend without really wrecking your brain or stressing about it. So the first way is going to be the shape of the market. So if you can see that the market looks like it's going down, simply put, it's going down. It's really not going to be like, you don't want to make it more complicated than it had to be. Vice versa, if we were looking at the market, let's just say none of this had happened yet, right? And we were we can only see this. Hold on, I'm gonna go back a little bit. If none of that had happened yet, and we can only see this part of our chart, we would say, okay, the market is going up, right? So just how we can see the market is going up by the shape, that's the same way that we can see the market going down by the shape. So that's the first way that you can establish the trend. Simply look at the shape. Up means the buyers are in control, and you're going to want to put yourself in a position to buy. And down is going to mean that the market is selling, so you want to position yourself to sell. The second way that you can establish the trend is look at the colors, right? For an uptrend, you're going to see more green candles, right? Which means there were more buy opportunities. So in this little section of the market, we can see that it's clearly facing up, and we can also see that we see more green candles than we see red candles. So this just lets us know, okay, that's a buying market. Now I'm just going to fast forward. Oh, actually, no, that's going to take too long. I'm just going to turn off replay mode. So pretty much we can see that the overall trend of this market is down because we see the shape, and then we see more red candles than green candles. If you guys can see that, just drop a 7 in the chat. And it's important to start on the, well, I choose to start on a weekly because it's giving me so much information over a larger period of time, right? I'm like, wow, if this market has been rejecting in the same area for weeks, this must be a strong area of resistance. And the area of resistance simply just means a place in the market where the market tends to sell. So say, for example, if I was to circle this, right, this is a strong area of resistance because this was 1 week and then it sold for a couple of weeks, right? Because this is the weekly chart. This was a week. It sold for a couple of weeks. It hit the resistance. It sold for a couple of weeks. It hit the resistance. It sold for a couple of weeks, right? So the bigger the time frame and the more data you have, the more precise your entry is going to be. And you don't really have to worry about what happens on the smaller time frames. And I'll talk about that. So the way that I like to highlight this, and this is the process that I go through when I'm dropping trades in the chat for you guys, I will over here, TradingView has all these amazing tools that you can use to customize your chart. But I don't use too many of them, but I do encourage you just to play around with it, see what you like, see what you don't like, see what makes the most sense to you, because you can take a bunch of notes on your chart. So I like to take this rectangle, and I'm just pretty much going to highlight where I see a strong area of resistance, right? So this means that anytime the market pushes into this area, right, I know I should be looking for a sell, simply because when the market has pushed into this area before, the market has rejected off of that area. Do you guys see that? All right. Now, another tool that I like to use, and this again, the tools are just there for you to take notes on your chart as you go. So when you're finding your entry point, you're simply just waiting for the market to do what you have analyzed it to do. So another tool that I like to use, and I'm looking for these entry points after I've set my area of resistance, and we can set another one up here, right? Because I know people will be like, well, why didn't you do this one? It's because this is so high. And it's like, do I really think the market is going to go from 6-1 to 7-0 if it hasn't been up there since 2021? It's not impossible, but it's not likely. But if it makes you feel better to take notes on that, you can do that too, right? But because we're looking for a sell, like you can do the area of support if you want to, right? But right now we're talking about resistance. So I can see that this is a range, right? The market, when it got in this area in the past, over a weekly time frame, it bought. And when it got into this area, it sold, right? But I'm only focusing on sales now. And I'll even turn this box red, so just so that we can it's just easy. I just want it to be straightforward. I don't want you to wonder. Red is sell, green is going to be buy in this case, and I'll just try to keep my colors consistent so it's making sense. Now, the second thing I like to do, you can wait until you get to a smaller time frame, or you can do it on a weekly time frame. You can do it on every time frame. I'll also pinpoint these exact entry points, the previous entries, because those will be my potential future entries. But the next thing I'm going to do, now that I've established that this market is selling, and I already have a potential entry point, I know that, okay, yes, it says I'm breaking up, so I'll wait about 5 seconds. I know that if the market was to come back into this area, I will be able to get in for a sell because I have all this weeks of data telling me that that's a great place to sell. If you guys can see that just visually and it makes sense, and I can even drag this in the past and I can see the same thing happen in the past. And this was in February 2020, right? So the story that the market always repeats itself is very true. And when we're looking for our entry points, we're simply waiting for the market to make a move that is made before, and that's how we're going to get in. So if y'all can see this visually, why I highlighted these areas, and you can see that once the market pushes into that zone, it rejects it, you can drop a 7 in the chat. And then just so it's not confusing, let me just put the green ones on the board too, right? I'll put the buy areas in green. Just so it's not confusing. So we have our area of resistance. When the market gets there, it sells. And we have our area of support. When the market gets here, it buys. So the next thing that I do is I'll take it down. You can do as many time frames as you want, but I like to do every other time frame. So you can go down to the daily. We've already established that we are selling, right? We've already established that. So we can come down to the daily. And if we zoom out, right, we may find even, you're basically going to be doing the same thing on every time frame. So now we can actually adjust this box, right? I'm trying to click on this. We can actually adjust this box to make it smaller because we can see the entry point is closer up here. But then we can also create another resistance area on the 4-hour because we see that. We can see that this was another place of resistance. And I'll just turn this red so it's not confusing. And then again, this is a smaller time frame. This is the 4-hour time frame because we know that the market is selling. Now we're just trying to figure out what is going to be our entry point for the sell. That's what we're trying to do as we're analyzing it on multiple time frames. Now, another thing I like to do, and again, this is completely optional, is I'll take a circle tool. And this may sound like a lot, but it's just a matter of clicking a button. And I'll literally highlight, right, the actual areas of resistance because these are my entry points. I know that if the market comes back to this place, because typically you'll look for this to happen at least 3 times. And we can see that this has happened 1, 2, 3 times. Once you see that the market has tested an area at least 3 times, that will build your confidence to let you know that this is a strong area of resistance. And again, I can stretch this over in the past and I can see that it happened here, right? I can keep going back further in the past and I can see that it happened here, right? And I can see that every time the market pushed into that zone, right, is actually called the supply zone. Every time this market pushed into the supply zone, it sold, right? We can see that. And where did it sell? Back to the support zone, right? It sold back to the support zone, right? Now, this one broke through the support, but it came back up. And then what did it do? Here's another area. It sold back to the support zone. It sold back to the support zone, right? If this is making sense, y'all, drop a 7 in the chat, right? Because the market repeats itself so much that it's not even funny. Like, it's not funny. It's just, if you know where the market has been before, you know where the market is going to go next time. Now, sometimes the market does break out, right? Sometimes the market does break out, but even if it breaks out, you know what it's going to do. Like, let's just say the market sold here. We know that this now down here is now a new level of support. So let's just take this all the way across our screen. So if this market continues to sell, we know that this would be essentially a TP for us. But this is still a really big area because we're looking at it on a daily. So right now, all these candles we're looking at go from recently all the way back to September 2022. Now, when the market started acting up, I think it was 2 weeks ago, all the USD pairs, GBP USD, Euro USD, they were buying so severely because they were tired of staying in these zones. Like, they've been in these zones for months. So they broke out and they decided to do something else. Like, they decided to buy. So it's nice to know where your supply and demand areas are. Supply is where you sell. Demand is where you buy. It's nice to know where those areas are because it gives you a better direction as to where you're going to go. So this is the daily chart, but let's take it down to the 4-hour, right? and we're going to reset our chart. We're going to take it down to the 4 hour, and we're going to zoom out, and we're going to do the same thing. Now, the reason why you need to do this on every time frame is because as you zoom in, you're going to notice even tighter entries, right? I don't consider myself a sniper. People have considered me sniper entries. It's like your entries are so good, and it's because I don't just look at the chart. Well, I do because my charts tend to just have notes on it. But looking at the chart for 5 minutes after you've taken your notes is going to be easy because you're like, oh, the market is in the supply zone. On top of having your indicators too, it just gets so simpler. Like it's really nothing to stress about. So anyway, let me actually change this to red. Let's not get confused there. Change this to red. All right. So as we can see on a 4 hour time frame, we have even lower entry points, and I'm just going to highlight them here. So I always like to start from this side because this is the side that the market's on. So we have a resistance area there, and I'll turn it red. And we also have a resistance area here. This is a stronger one, and it's basically just highlight as many areas of resistance as you want. But the market is not that high right now, so come to where the market is and see the next possible resistance, strong area of resistance. We got one here, right? And we can drag this over. We can make this box bigger just so that it includes all this. And I highlighted this area because as we can see, the market, let's get our circles, the market rejected and then sold, right? That happened one time. We can see it happen another time. It's in this area. We just need 3 to be like, okay, this is a good resistance zone. And cool. We got that, right? So you don't have to keep all this stuff in your chart, but you really just want to highlight and be like, okay, cool. So now, of course, the next thing we do is go down to the hour. You're literally doing the same. All right, let me come out of this, y'all. Oops. You're literally just doing the same thing on every time frame, right? So on the hour, we can see that the area of resistance is still valid. It's still valid here. And if you find another smaller resistance, you don't have to keep the higher time frames there if you don't want them. You actually can, if you only want to do a few time frames, you can do that. But we can see an area of resistance here. Right? So pretty much you just keep doing that and keep doing that until you get down, even if you want to do it on the 15. Oh, let me zoom out so we can see. Even if you want to do it on the 15, you can do that too. And then as you zoom out, you can clearly see that was my resistance area from the weekly. That was my resistance area for the 4 hour. And yeah, so if I was to get into this trade, I would be trying to set a pending order at the closest resistance area, right? Because we already know that the market is going for a sell. We're just trying to find the closest resistance area to where the market currently is and set a pending order. So if I was going to set a pending order for this sell, my lowest pending order will be here, right? I can see that the market is currently at 6170. My pending order will be at 6200, which is only about 30 points up. So it'll be a 30 pip a pending order, right? Because that's the closest resistance area, and I know I'm getting in for a sell, right? We already established the market is selling. Now we can either wait for it to revisit here. We can wait for it to revisit here. We can wait for it to revisit anywhere in this area because we know that these have been previous areas of resistance on higher time frames. If that makes sense, drop a 7 in the chat. Okay, Padma says, so you draw support and resistance at every time frame, weekly, daily, and 4 hour. No. Whatever the market is doing, if the market is selling, I want to find resistance at every area because I need to figure out where I'm going to get in. You can draw support and resistance at every time frame, but personally for me, I don't like my chart to be too crowded. Like if I would have added red and green boxes on this chart, it would have just been too overwhelming for me personally. So because I know that I'm focusing on sales and I will be a bear in this market because that's what the market is doing, I'm only going to mark up the resistance areas. If that makes sense, y'all, let me know. Right? So again, I'm going to delete all this stuff off the chart. I know it seems like a lot of work I just did, but it really wasn't. It really wasn't because it doesn't take that long. So again, even if you just want to use lines for this, right? Even if you just want to use lines, you can do the same thing. Go to the weekly, figure out where the resistance was. Put a line right there, right? Skip the day. You can go down to the 4 hour, right? And then we can see, okay, I see an even smaller area of resistance. I see one here. I see one here. I see one here, right? And then that's the closest area of resistance to where our market is, right? But if we go down to the hour, right, we can reset the chart and even have a lower area of resistance here, right? So my pending order can be 10 pips above this, right? Okay, so cool. We know how to set up our support and resistance to figure out what the market is doing and how to choose a potential entry point. And then once you establish that, you figure out, okay, where are the areas of resistance? Then you can check for your indicators to see, okay, when am I going to get in, right? Do my indicators actually align with this? So let me upload my strategy once again. And then we're going to see what's going on, right? So we can see that the candles are below the EMA, right? We can see that the MOM is not quite facing down, it's moving sideways, but the market just open, so we'll give it some time. And we can also see that the stochastic, it hasn't quite crossed up yet, so don't let that trick you. Like, just because it's facing up, it hasn't quite crossed back up into the shaded zone, so it's technically still a signal for a sell, right? It's still a signal for a sell. So you can essentially, if you wanted to, set a pending order here for a sell, or you can set a pending order here for a sell, right? Because remember, your EMAs are also used as areas of resistance. So even if I zoom out, right, let's just say I go to the 4 hour chart, you'll see sometimes where, say, for example, like right here, we can see that we have this area of resistance, this red line that we've already established, plus the candles are falling under the EMA, right, on this example here, plus the momentum is facing down, plus the stochastic is facing down. So all of those things are like, okay, if I was in the market at this time, the market is reaching my previous area of resistance, and I have my indicators for a sell, that's going to be like, it's going to be like a no-brainer. Just like vice versa. If I was, well, not vice versa, but here's another area of resistance. We have the line right there, and it's very close to our EMA, right? So that's why sometimes it's better to use the rectangle, because your entry point don't have to be so specific, but you'll know, okay, it's in that zone, it's crossed below the EMA, my MOM is facing down, my stochastic is facing down, cool, right? And then even just zooming out, right? I don't know if I did a full lesson on this yet, but we have all these things that tell us the market is selling. We have our confirmation that the market is selling, but not only that, the market has to fill in this gap, right? That's trading the gap is actually a strategy. And in conjunction with all this other stuff we're learning, is very helpful. So trading the gap just literally means this. If we were looking at this market, right, the market has to come back down to this point in order to complete the pattern. So essentially, the market literally has to fill in this gap, right? You guys can, if you guys can clearly see the gap in the market from here to there, right? Drop a 7 in the chat. That's another way that I would know that I need to sell this market, because this gap has not been filled. It hasn't been filled. Not only has the gap not been filled, the candles are under the EMAs, right? And this is something that I noticed a lot too. If the candles are under the EMAs, simply focus on the sells, right? Because, wait, sorry, let me clear this off the chart. Because even if the candles, for example, are below, let's look right here, right? The candles are below the EMA. Yes, you're going to have a green candle. You may have a green candle when the candles are falling under the EMA. That's perfectly fine, but that doesn't take away from the fact that it's still a selling trend. So right now, we're having a little bit of pushback from the buyers. This current candle looks green, but based on everything else that we've established, we know that this is a selling market overall. We found multiple entry points for the market going down. We're going to set a pending order at the most recent high, and then we're going to sell down to the gap. So that's essentially how I would set my TP or my stop loss. You said you don't see the gap? The gap is, oh, you don't understand. All right, let me see. Okay, let me go back in the past. Maybe that'll make sense. And let me take my session breaks off because that will really be a lot. Hold on. And let me actually take all this stuff off. Let me take this off. Oh, wait, I could just. All right. So trading the gap is like this. When this market is sold, right? Let's just pretend we're looking right here. When this market is sold, and then this market bought, right? From here to here, there's a gap. There's literally a gap that has to be filled in. Like, in order for this to be complete, like, let's just say this was a V. In order for this V to be complete, it can't stop right there. It has to go all the way back up so that it's even with this one. So there's a gap right here. Now, because the market was going up during this time, this entire time, the gap had to be filled from here. It didn't get filled here. Now it was filled on this side. So no matter how long it takes, the gap will be filled, right? It wasn't filled here. Like, we wasn't able to complete the V here. It stopped short. It dropped down. We didn't complete the V here, but eventually the V was completed, right? So that's what trading the gap means. It literally means that the market has to fill in space that it hasn't filled in. And that's about liquidity too. Like, liquidity essentially is trading the gap, and traders are just coming in to make sure that they clean up everything that they didn't clean up before they continue their pattern. Sure. I highly encourage everybody to ask questions. If you want to unmute yourself, you should.
Yeah, I'm trying to do that. Sorry. So my question is, it took a while to fill the gap, right? So the one that you showed previous peak, that's at 0.062 something. Can you go back a little bit in time? Just a little bit? Yeah. So it took from, like, say, May 1st or second week all the way to July. So what do you do in that case if you're playing for the gap? We are not doing that, right?
You would just take partials. Like, if you wanted to fill in that gap, that would be a lot of pips. Like, you would be holding that trade for a long time if you wanted to fill that in. That's why I'll do 40 pips, then 80 pips. So it's like,
Okay.
I know it's going in that direction, and I don't try to catch the whole move at one time because it can take a really long time.
Got it. Thank you.
You're welcome. So pretty much whenever you're looking at a market, the first thing you want to do, I'm gonna just try to recap because I feel like I said a lot of stuff and some stuff may have gotten lost in translation or become confusing at some point. But this is the process that you're going through when you're doing this. The first process is you're establishing what the trend is. Now, we've established for NZD USD that the market was selling. The second thing we established was at what places did it sell across multiple time frames? What are the areas of resistance? What are my potential entry points? Where am I waiting for the market to retrace to before I actually get into this sell? Then the third thing you're doing is, once you establish what is the closest area of resistance to where the market, and this is just for the sell. Once you establish what is the closest area of resistance to where the market currently is, that's going to be your entry point. But you don't actually want to enter or set your pending order until you get your confirmations, because first you're just establishing your bias and you're like, okay, this is why I'm biased. I can see it's a sell, but why is it a sell? It's a sell because, and we just going to come back to our indicators for a second. We've already established a selling, but it's a sell because it's under the EMA. That's the first reason it's a sell. The second reason it's a sell is because the momentum line is below 0. The third reason it's a sell is because the stochastic is also below 0. So although it looks like it's facing up and it looked like it could be at an area of support, is overall is not. And I think I was talking about this in the office hours I had last week. Don't get scared by the noise, right? Don't get scared by the noise, because if the market is doing that thing, it's going to do that thing. And here's a great example. The market let's just say somebody got into the trade right here for a buy, right? Because they had all the confirmations they needed for a buy. The market went through all of this noise before it actually bought, right? But if you would have just held it because you had all the confirmations that you needed, right? Once the candles are above the EMA, it's going to continue to buy. It's going to be consolidation. It's going to be pullbacks, but it's going to continue to buy. So don't let the fact that it's a red candle above the EMA scare you. You can still get in for a buy. You can just set your TP and stop loss appropriately. Just like here, just because, no, I'll look here. The candle crossed below the EMA. We know the market is going to sell. So just because you get stuck right here, right, that doesn't mean anything because the market still continue to sell. So don't get caught up in the noise of the market. This is why I encourage everybody not to look at your trades while they're actively playing out, because I've been in trades. For example, the NZD USD trade that we took last week, this is the perfect example. I analyzed that this market was going to sell. Now, I also noticed that the market was very noisy, and a noisy market means this. It's consolidating. It's just a bunch of noise. You know what it's going to do, but you really have to. I think the other comparison I gave was turbulence. Like, you know, your plane is going to get to your destination, but it may be a little shaky. You don't just start freaking out because it's turbulence. You're still going to trust the direction that your flight is going. And it's the same thing when it comes to trading. So I feel confident to I'm going to be trading NZD USD this week for a sell because, one, this gap is not filled. And two, I have a lot of confirmations that lets me know this market is going to continue to go down. And it's basically everything we just talked about. Don't get scared about this. Just because the market is oversold. Oversold means it's outside of the shaded area on the bottom. That's oversold. It means that there are absolutely too many sellers in the market and that it is inevitable. It is absolutely inevitable that this market is going to turn around and buy. When the market is up here, in this white area, it's overbought, which means that there are way too many buyers in the market and the market is going to sell. So just because the market is overbought or oversold, that doesn't automatically mean that it's going to turn around just yet. And I had to learn that the hard way. So yes, the market may be down here, but until it actually crosses back up into the shaded area, we're going to focus on sells. Another thing I had to learn the hard way was trade what you see, not what you want. Like, you may be like, oh, it's going to be a reversal because this and that. No, it's not going to be a reversal yet. It's going to continue to sell because that's what it's saying it's going to do. Like, don't trick yourself and don't try to. Essentially, we are predicting the market, but we're also trading with the trend. Like, we're predicting what is going to happen based on what has already happened. We're not trying to guess what the next move is. Because, yeah, we know it's going to buy, but we can't say, oh, it's going to buy right here, right now. It's just better to just trade with the trend. If you have confirmations for a sell, go with the sell, no matter how crazy it looks. Just go with the sell, right? And then even if we take this down to the hour, you can just zoom out. It's a gap. It has to be filled. And we can see that the low was actually 60.54. So I wouldn't be surprised if this market actually came all the way down here. I literally would not be surprised. Now, before I move on to something else, I just want to help you guys put these settings on your chart so that it's easier for you to see, right? So on your settings, you want to, hold on, let me find it. Let me find it. Indicators, values. Okay. Sorry, guys. Okay, here we go. So if you go to your settings, right, it's a few different ways you can get to your settings on your chart. It's a bunch of different things you can do. You can take stuff off, you can put stuff on. But these are things I have on my chart to help me. So on the chart settings, if you go to the scales tab, if you want the currency name, I'll just move this over so that y'all can see the changes. If y'all want the currency name on your chart, and I like to have the currency name so that when I'm dropping my screenshots, everything aligns, you can just click this symbol name so y'all can see it coming off and on next to the price. That's important. I need to see that. Symbol, last price. That's also important because you want to know where the market currently is right now, because that will be your market execution price. So that's another helpful thing to have on. Now, if you want to have the previous day close on, you can, because maybe that'll help you if you're a day trader. I don't have that on, but that don't mean you don't have to have it on. High and low price is a game changer, especially if you do decide to add trading to the gap as a part of your strategy, because if I turn it off, we don't see no high and low. We could put a horizontal line, we can play the guessing game, or we can simply say that's the lowest that it's been. That's going to be my TP3, and I'll work backwards to my TP2 and TP1, right? If that makes sense, y'all, drop a 7 in the chat. Why it's important to have these things on your chart, because if I'm selling, again, I didn't tell y'all the third way to spot a trend. If the market is buying, we're looking for higher highs. The market is going to be creating higher highs. If the market is selling, the market is going to be creating lower lows. So until we actually reach the low that's on the chart, we can take advantage of the market as it's falling, which is why, yes, you can stay in this trade for 200 pips. Sometimes NZD USD will move 140 pips in one day, and you can catch that entire move, but I just like to make sure I'm securing profits, because previously I was the type of trader who I would get caught in the noise. I would look at my trade at the wrong time. I would get out the trade because it was red, and then I would wake up and find that the market had did whatever it was supposed to do exponentially. Like I couldn't take the noise. I just was like, oh, I'm losing $20. I need to get out right now. So I would just get out the trade, and it still ended up going that way. I just got caught in the middle. So for me, it's helpful to have the high and low price on, because if I'm in for a sell and the market is naturally creating lower lows, and that's the lowest place that it's been, until it actually gets there, I'm going to be confident with my trade, no matter what the noise is. It's supposed to be creating lower lows, right? I really hope that makes sense. So that's why I like to have high and low price on, because that's essentially my target. That'll be my TP3, and I'll just go backwards from there, right? You can have, this is helpful too, if you want to have your indicators names on so you can see what they are. But y'all know me, I don't like too much stuff on my chart, but it is cool to have the indicators values on there, right? Especially for the momentum and the stochastic, because right now we can see that the momentum is at negative 0.0018, right? If you guys can see that, drop a 7 in the chat, right? We can see this value popped up for the momentum is at negative 0.018, right? And we can also see that the stochastic is at, we can see that the fast line, which is the blue line, is at 13, and the orange line is at 7. Now, do these numbers really matter? Yes and no. All you need to know is that if the momentum is below 0, which it is because it's negative, you're selling. It's really that simple. If it's below 0, that's a sell confirmation. Just like the stochastic, if it's below 50, that's a sell confirmation. If it's above 50, that's a buy confirmation. That's why I always tell you, when it crosses up, that'll be above 20, right? If it crosses above 20, once it actually crosses above 20, the market is going for a reversal. The reversal trend has started. But as we can see, is it above 20, y'all? Right? Even though it's facing up, right? And it's close to that shaded area, it's not above the 20 line. And the 20 line is this bottom dotted line we have right here. If it's not above 20, the buying trend has not started. You're still in the clear for a sell. And until it crosses above 20, you're still going to be in the market for a sell. And then once it crosses above 20, the buying trend has started, right? Once it crosses above 50, we should officially be in buying momentum. But anything below 50 and below 20, sell, right? Is straightforward. And the momentum below 0, sell. Above 0, buy, right? And this is for my more technical people. I'm more of a visual person. But if this is helpful, you can just come in here and be like, all right, stochastic below 20, momentum below 20, I'm selling. If that's easier for you than looking at it and trying to guess, drop a 7 in the chat, right? Because that could be helpful. Like using the Forex screener is very helpful because you're just looking at the numbers, right? You don't have to play the guessing game. You can see. So that's the indicators, financial values. Countdown to bar close is actually helpful. Okay, more of a numbers person, so that'll be helpful. And I'll show you one more thing, Padma, as well. That will be even more helpful to you, where you won't probably ever have to look at this chart. So countdown to bar close is helpful because it's literally just counting down the time to the next candle. And I won't get into this too much today, but if you are a time-based trader, not high frequency trading, but you want to find your entry points based on time, like if you've ever set a pending order on MT4 and it said set expiration time, this will be helpful, but that's another video for another day. So pretty much all of these settings help me just to be able to look at things more clearly. And let me take this off because I don't want it. So yeah.
What's the plus button setting in the settings? The last checkbox.
Let me see. Let's
That,
see what this is. Clicking. I don't know. And then oh, okay. Okay, I know what this is actually. The plus button pretty much it's a button that appears on your chart that allows you to do certain things with that button. So say for example, if I scroll right here and I click the plus button, I could say add an alert.
okay.
So at that place, that'll be like, this is where my TP is, or I just add an alert right there. So that's add an alert. And you can also, let me delete that. And you can also create a new order if you're using the paper trading app, which is within TradingView. You can also, you can't sell directly on TradingView, but you can have a demo account here. So if I click sell, paper trading should have popped up. If I connect it, it'll automatically put me into that trade on the chart and it'll be like a demo. So, oh yeah, but this is what I'm just going to show you really quickly, Padma, this Forex screener down here, because Forex screener is all numbers. So this may be helpful for you. So let's say we're looking at NZD USD. And I don't know if this just comes with the paid version or if it's free, but it's only $15 a month for TradingView. So you would click on the Forex screener at the bottom, and if I put in NZD USD, I'm gonna click on it, and I can see everything right here that I need to see. So I would need to see, if I'm going for a sell, I need to see all S's, right? And I have all my indicators here, my 50 EMA, my 200 EMA, my momentum, my stochastic, all my numbers are there. I can put this on the 4-hour. I can see, okay, I got sell, buy, neutral. Okay, that's not really too much. If I put it on the daily, I have all sells. So, okay, I'm creating a selling bias. If I put it on the weekly, I have all S's, right? I know I'm going for a sell. Now I just need to find my entry point, right? And then you can change it to the 2-hour, whatever you want. I got all sells. So again, like I was saying, even without looking at the Forex screener, everything is aligning for a sell. And how do we know where we're going to sell down to? We're going to sell down to a previous low. That's literally what we're going to do. We're going to sell down to a previous low, right? So the market's selling right now. A previous low will be here. Why is a previous low there? Because it literally is. Like last time the market got here, it went up. Last time the market got here, it went up. Last time the market got here, same line, right? And this is over a period of time. Every time the market gets to that place, it goes up. So if I'm selling, that is going to be a TP for me because I know that's an area where the market is going to go. And if I want to set a TP2, y'all already know I'm coming down even further because once the market got down here, it turned around, right? So that's literally what I'm doing when I'm finding these entry points for y'all. I'm just looking at it. I'm establishing, okay, what is my bias? I'm finding my closest entry point to that particular thing, and I'm selling or buying down to the next high activity area, right? It's that simple. Like a part of this class, I really want everybody to be less stressed because it can be hard to find out, okay, what is my entry point? Where do I get in? Where do I get out? It can be very confusing because you can be like, I have all the confirmations. I know what I'm doing, but where do I actually enter? You're going to enter at, if you're setting a pending order, you're going to enter at a previous area of resistance for a sell. And your TP is going to be at a previous area of support. You just have to get comfortable with staying in the trade and being comfortable with staying in the trade, right? Even if you're looking at it on a small time frame. This is an hour time frame. This gap has not been filled. So that's a quick little 33 pips right there. Small gap being filled. If you want to stay in trade longer, fill the bigger gap. That's basically what I'm doing. So I do want you guys to try this out. I want you to try to take the stress out of your trading and really just use what's on your chart to help you instead of playing the guessing game. Stop being so sentimental. Like, it's 3 ways you can trade. You can trade by the news strictly. You can trade by technical analysis, which is a lot of what I teach, or you can trade by how you feel. Like, oh, it look like this market going down. I'm gonna just get in for a sell. Don't stop being so that way. Like, you can't just say, oh, I feel like the market is going to do this, because you're not the only trader in the market. It's literally millions of people that are trading. And some people have the same opinion as you. Some people have a different opinion as you. And the only way the market is going to go in the way that you decide is if more people are on the same side as the sellers than the buyers. Like it's nothing more or less. The only way that the market sells is if more people believe that the market is going to sell, so they push the market down. So if you see something, be confident, because 9 times out of 10, you're not the only person seeing that, and you're not the only trader in this market, right? And that's where these indicators come from. So I'm just going to do, so pretty much we're looking at NZD USD for a sell potentially for this week. Now, again, market execution would just mean you're getting into the trade right now as is. Your entry point is going to be 0.61672, and your TP is going to be whatever you want it to be. But in this case, it'll be 0.61337, which is about 33 pips. If you wanted to take this trade, it's completely up to you, but you don't have to do that. Right now, if you wanted to set a pending order, because I think I should just review that really quickly. Well, before I review that any quickly, if you guys understand what the different 5 market orders are and how to use them and when to use them, drop a 7 in the chat. If you do not understand the 5 types of pending orders and when it's appropriate to use each one, drop a 9 in the chat. Yes, if you understand and you know when to use a buy, stop, sell, limit, sell, limit, market execution. No, if you don't know what I'm talking about and you just don't get it. Okay, I got 1 9. Okay, Spicy says yes, she knows. Joe, I know you're driving. Raquel, Teresa, Will, 9 still get confused. 7 and 9. Okay, so I'm going to break this down. And I also have a 30-minute video on this, and I have a 5-minute video on this. Okay, and let me just take all this stuff off my chart so it's easy to see. So market execution, right? Market execution is I'm getting in the market whatever the current price is, right? When I drop trades in the chat, I say you can get in that market execution, or I always give you 2 options. If you get in that market execution, you're just getting in where the market is. If you get in where the market is, based on the TPs and SLs that I set, that's for the pending order. But if I get into this market now, 0.677, and I want it to have a TP of 20 pips, my TP would be just 20 pips from whatever I got in. So if you take the trade ideas from the chat and you get in that market execution, you have to adjust your stop loss and TP based on what your actual entry is, not the entries that I drop in the chat, because you're going to get stopped out sooner than later. It's not going to make sense. So I'm going to use if I'm going for a sell, I would use the short position tool. If I'm going for a buy, I use the long position tool. So market execution, let's just say, and you can adjust this. So I'm going to just put it right here for now. And I'm going to click it. So let's just say my entry point was 0.61670. I'm going to literally put the price that I actually got into the market, not the price I dropped in the chat, not the TP, not the stop loss. And this is why it's important for y'all to know how to use this tool, because sometimes I'll drop trade ideas and you guys will miss the trade ideas. And then you'll come into the chat later and you'll try to get into the chat. You'll try to get into the trade at market execution. You may not make money, or now your TP and your SL are disproportionate and it just doesn't make sense. So if you miss the trade idea, but you still want to take it at market execution, you come in here. If you're going for a sell, you choose short position. If you're going for a buy, you choose long position. You put your actual entry point here. If you still want to secure 40 pips in that trade, you put your 400 there. If you want a 40 pip stop loss from your entry, you put that there. And then it literally gives you what you need. So the most information that you need is your entry point and how many pips you want to secure. Your TP, this is what you will plug in for your TP. Or if you're using an Android, this is where you will put in under your green line. Your stop loss, this is what you will put for your stop loss. And this is where you will put under the red line if you're using a Samsung device. So that's market X. You just get in where the market.
Chacha, just 1 minute. Okay. So when you say lot size 5, that is the 0.5 lot size?
Well, I didn't mention anything up here because that's just preset stuff. Like this isn't like my real account info, but you can adjust this to your account,
Okay.
however your account is. So this is a 5. This stuff really doesn't matter, honestly.
Okay.
It doesn't matter. So yeah, this is just to help y'all find your SL and TP, right? Because you won't always, if you set the pending order, that's a different story, which I'm gonna go over next. But if you're doing market execution, you have to modify your entry and exit points so that you can still get the money that you need from the trade. That's market X. Now, here is where people tend to get confused, and that's when we move into limit orders. So let's just say the market is currently here, right? Because the market is actually right there. And I'll just make this line black so it's not confused. The market's actually there. If we're getting in for a sell limit, right? And guys, please write this down. A sell limit means that your entry point is above where the market currently is, but you still expect the market to go down. So what this means, you're not just going to click sell when you get into your app. You're going to wait. I'm going to put this line back here. You're going to wait for the market to come back up. Your trade is going to trigger once it comes here, and then it's going to drop back down. So a sell limit means you still want your TP to be below entry, but where you enter is above the market, because we know the market goes up and down. Like we literally know that the market goes up and down. So if the market is here, our sell limit will be here. So we would set our sell limit here. Once the market reaches that point, it's going to come back down. So sell limit means your entry point is above where the market is, but your TP is below where the market is, because you're just waiting for the market to retest and then come back down. If that makes sense, y'all, please drop a 7 in the chat. Okay, awesome. I need to get 2 more 7s to make sure that makes sense. If it doesn't make sense, I will explain it again. Okay, so sell limit is market, your entry point is above. Now a sell stop, and this is a perfect example of the trade that we took last week. So let's just say that the market was currently here. A sell stop, we're setting our entry below where the market is, and our TP is still below. So what this is saying is, I know the market's selling. I don't think it's going to go back up, so I'm not going to set a sell limit, but I know for sure it's going to sell. So I'm going to set my entry point below where the market is, right? So that as the trade is falling, my trade is going to trigger down below where the current market is, and then my TP is still going to be below that because it's a sell stop, right? So sell limit, market will go up before it comes. No matter what happens, this is still your TP, right? So let me just put that there so it's less confusing. My sell limit would be up here. I'm going to put sell limit is up here. My sell stop is down here. Sorry, y'all. This is so sloppy, but y'all get the point, right? But no matter what, your TP is at the bottom. No matter whether you're getting in for a market execution sell, a sell limit sell, or a sell stop sell. Just one is above where it's at and one is below. Does that make sense, y'all? Just let me know. So when I say, and I drop sell limit orders in the chat, I'm basically saying, yeah, we know the market is selling, but okay, yeah, I'll explain it again. And maybe actually, yeah, I'll explain it again. So market execution, you just click the button as is, adjust your stop loss and TP based on your real entry point. No matter what, this black line is going to be our entry, right? So just to not get confused. So if we are setting a sell limit, let's just say our sell limit entry was here, right? Sell limit means the market is currently right here, but we know it's going to go back up, right? Because the market always goes up and down. So instead of just getting in right here, we're going to get in up here, right? We're going to wait for the market. It's like HFX. When the market gets to 361 or higher, sell. We're waiting for it to come back to a previous high so that we can have a better entry point, because when it does sell, we're starting up higher, so we're catching more pips, right? So a sell limit is you're waiting for the market. Your entry point is higher than where the market currently is, but your TP is still below because it's a sell. Okay. And then a sell stop is your entry point is below where the market is because we know it's going to sell. So it's going to trigger as the market goes down, and your TP is still going to be down here. So one entry point is above the current market, one entry point is below the current market. Okay, and I will forward the graphic in the chat again. Now, buy limits and buy stops are literally just the opposite, and I will, hold on, y'all. I will, okay. Now, when we're doing buy limit orders, it's the opposite. So just basically ignore these candles over here, and I'm gonna just draw it out for you. So if this was our entry point, and I'll just put E for entry. If we're going for a buy limit, maybe I'll just use numbers because it's easier, right? This is our entry. Our entry is at 5. 5 is our entry. If we're going for a buy limit, right, we will want the market to come back down to 3, right? Because we want the market to come back down before it goes up. Our TP is still going to be 7, but our entry point is going to be 3, even though the market is at 5, right? The market is going to come down and it's going to go back up. That's a buy limit. Now, a buy stop is the opposite. A buy stop is our entry is at 5 still. I mean, the market is currently at 5. Our entry point is at 7 because it's above the market. Our TP is at 9, right? So a buy stop is the market's here. We're going to wait for the market to come back down, and then we're going to take TP up here, right? A buy stop, this is our entry. We're going to wait for the market to get here and then continue to go up to 9, right? So it's just 4 different things that you can do. And you pretty much just use your discretion as to which one you really want to use, honestly. It's like, if you know that the market is selling, like say, for example, we already did this analysis right now, and we can see that it's a little green candle forming right now. So that's the noise in the market. But we know, or we've assessed that this market is going to sell. So I typically set sell limits because I know the market is going to go up a little bit. It just always does. Like, it was a big selling move. So it's going to go up a little bit before it comes back down. If you want to set a sell stop, it's really up to you, honestly. But it helps because you don't have to be physically on the charts at the time that this thing is happening. It's like you already know, and this is why sell stops and buy stops are cool, because if I know that this market is selling, and I know, for example, the market is going to sell down to here, that's about 30 pips, right? If I know the market is going to sell down 30 pips, instead of waiting for it right now, I can literally just set a sell stop right here. That's what we did last week. We set a sell stop. So once the market continues to drop, my trade is going to be triggered right here, and it could still hit TP right here. Like, I don't have to wait for that to happen. I can set a sell stop right now. And then once the trade triggers, whether I'm on the chart or not, it's triggered. Right. So it's just really helpful to set buy stops and to set sell stops, pretty much. So do you guys have any questions about anything? The main thing that I wanted to go over today was trusting your trade by analyzing it on a higher time frame. And the second thing I wanted to review was the limit orders, because I've been hearing that people feel like they have to be on the charts at that time, and that's just not true. You can do all your analysis for the entire week and then set all your pending orders. If you want to take big trades, like if, for example, we think the market is going to sell down to here, right? We think the market is going to sell all the way from here to here, right? That's about 69 plus 50. I don't know what that is, y'all. I'm about to add it up. Okay. That's about 119 pips, right? Now, that's a gap that has to be filled. That's going to happen like sooner or later. Now, if I don't want to wait, I can get in that market execution now. I can wait until the market comes back up to sell, or I can simply set a sell stop here, and I can set my TP here. And I can pretty much set sell stops all the way on the way down. So my trades are going to continue to trigger and hit TP as they go down. right? That's why it's important to set a sell stop. Like we can literally set sell stops right now. And I'll put these things on the chart if you guys want to enter these trades. I like to wait for the market to develop a little bit more, like 8 o'clock or 9 o'clock. But that will be a potential sell stop. That will be a potential sell stop. And we can just zoom out and see how far this market is going to go down, right? All these can be sell stops because it has to be filled, right? You can set these orders right now. Like you can literally go into your MetaTrader 4 or your trade locker and you can set sell stops, and then you don't have to look at this trade again until Tuesday, right? That's why they're important, because they're pending orders for the future. But those are the main things that I wanted to cover for today. Again, I will be dropping trade ideas throughout the week into the chat per usual. It's pretty much a copy paste profit thing, so you can take them if you see them. If not, I highly encourage you guys to get in the charts and look for yourself. If you don't feel confident to take the trades in your challenge account, you can always take them in your demo, because you have to trade to know if you're right or wrong. Like I can tell you how to drive, but until you get in the car and get behind the wheel, it's not going to make any sense to you. So before I end the class in about 10 minutes, we can review another chart, right? And just basically everything we just talked about today, do it on another currency pair, or I will take any questions that you guys have. So you can just put in the chat what you prefer. Do you want to do an additional chart markup, or do you want to ask questions and I will answer those questions that you have, whether it's reviewing something we talked about here or something that else you want to know. Okay, so we got one for additional chart. I'll let one or two more people answer. Okay. Okay. Well, y'all said chart. So we're gonna look at GU. And I already got some markups here on GU, as y'all can see. But I will start from the top because it don't take that long. All right, y'all. So GU, I'm literally just gonna walk y'all through this from the beginning. Exactly what I would do. Reset chart. So I'm looking at GU. And the first thing I notice is this market has been on a selling trend, right? This market has been on a selling trend. So I can look for sales. But then the second thing I notice is that the candles have started to consolidate above the EMA. And we know that whenever the candles start to consolidate above the EMA, the trend has potentially changed. So this is confusing because the gap has already been filled. If y'all can see, this gap has been filled. So this market is a little bit it's a little bit confusing. So we're gonna look at it on another time frame to see if we can get some clarity. But on a weekly, right, we're gonna mark up resistance, which is pretty high. It's pretty up, it's up here, it's up there. See if I can move this down. Let's see if this makes sense. If I get another area of resistance there. Because what I'm looking for is at least 3 rejections. I don't care how far in the past it was. I just need to see, is this a valid area of resistance? Okay, so I get it. I get one here, right? And we could put our circles here too. And trading is really not learning anything new. It's doing the same thing over and over again. Right? We can see every time it got into this zone. If y'all can see this, just let me know if y'all following along. If y'all can see every time it got into this zone, or 3 times that it got into this zone, it rejected and it sold a lot. Just drop a 7 if y'all can see that. Okay, cool. So that's on a weekly time frame. That's the first thing we have established. We don't really know if we buying or selling yet because we getting mixed signals, but let's keep going down because everybody don't even look at the weekly. Like some people would never look at that. So, okay, when I come down on a smaller time frame, if I'm only looking at what I can see, plus the candles are above the EMA, that's more buy vibes, right? Because it's already resisted off of this area. So it could be a potential buy at the EMA, right? It could be a potential buy at the EMA. And what I'm doing when I'm doing this, y'all, I'm literally just talking myself through what I see, right? I'm just talking myself through what I see. So I see the candles are above the EMA. but I see it previously resisted there. So what I can do is I can say, I could set a pending order up here, but do I really think the market is going to go from 128 to 131? No, not right now. So maybe I should focus on the sell. I'm going to go down to the 4-hour. And as you get down to these smaller time frames, remember, you just want to be adjusting your notes that you're seeing. So I'm going to be adjusting my circle so I can say, okay, that was actually where it was selling. On this smaller time frame, we can add another resistance box here. And then on the smaller time frame, I can see that. Remember, it was half and half. So now we're just trying to figure out what's happening more. On a smaller time frame, I see the candles have crossed below the EMA. Now, because this is an area of resistance here on a 4-hour, I need to now zoom out and find 2 other areas of resistance. And if I can't in any recent time, I'm just going to go down to the hour. Do I see 3 areas of resistance on the hour time frame? And you can zoom in to see. I see 1. I see 1 area of resistance here. But I also see on the hour time frame, the candles are, see, look, this is a market where you literally, if it's not giving you a clear, it's literally half and half on every time frame. If it's not giving you a clear markup, you simply just look at another pair. Like this pair is too half and half to me because I can see my stochastic is up, my MOM is coasting on the line. It's just too much noise. So I wouldn't even trade this market. So that's a learning lesson in itself. If you can't see a clear anything, just don't do it. Now we can look at AU. And again, you just start the process over. Okay, I see more selling. Where's my area of resistance? Is it strong? Do I have 3 rejections in this area? Okay, yes, I do. Okay, cool. That still looks good to me. And it's crossed under, so I'm getting more sell confirmations. Okay, perfect. This is looking way better to me. But if y'all can see literally how AU is obviously more clear than GU, just drop a 7 in the chat if it makes sense. Like, if it don't make sense, don't trade it. If it makes more sense than not, that's when you want to do your deeper analysis, okay? Like, GU was clearly all over the place. Like, I'm not messing with that because why would I do that? Like, it's not clear. And if it's not clear, it just doesn't make sense to take the trade. So we have another resistance here that we can do on the 4-hour. We have another resistance here on the 1-hour. Let's look at this and see. Okay, I have... Yeah, this one is more selling than buying, but it's also not that clear. Again, the market just opened. So as y'all can see, it won't always be a perfect opportunity. But if you don't see anything, you really don't have to take that trade. This market too is also not as clear as I would like it to be. So the only market that I feel confident in so far is in NU, NZD, USD. So that's what I'll be paying more attention to. I will monitor AU for a sell, and GU I'm just going to stay away from for now. But y'all can do this with each and every pair. This is what I'm looking for. I'm getting mixed signals with, I'm getting confused. No, can't look at US 30 because US 30 is a very high risk asset. It's not Forex. Most people don't have the account balance to trade US 30. And yeah, that's more of a Monday through Friday, 9 to 5, not really a Sunday pair because it's a stock thing. So that'll be maybe on another class, but not this one. Not this one. That's a wholly different beast. But yeah, y'all, I'm gonna keep looking at the markets. I encourage y'all to keep looking at the markets. The market literally just opened at 5:00 p.m. So again, I typically don't start taking trades on Sunday if I'm trading on Sunday until like 8 or 9 p.m. just so that the market can actually develop and I can have a good read on my 4-hour chart because it hasn't been 4 hours since 5 p.m. So it's going to be impossible for me to establish anything concrete for the upcoming week. So I'm just going to wait it out. It's really a patience game, but in the meantime, you can look at the charts, play around with it, see if anything pops out to you on any other charts. You don't have to trade these pairs. You can look at any pairs. You can look at CHF pairs. You can look at JPY pairs. You can look at Euro pairs, AUD pairs, and really see what you see, right? But that's really okay. Do you generally stick to one trade at a time? When I'm dropping trades in the chat, I'll drop one trade at a time. For myself, no, not for myself. For myself, I would do maybe 2 trades and I would twin trade both of those pairs. But overall, I am not entering more than 5 trades a day. So whether I'm getting in NZD USD twice and AUD USD twice, that's the most I'll do. Because when you start looking at too much stuff, you will tend to overtrade and then you will get outside of your trading plan. So if you have a solid setup on a pair, then I would just stick to trading that solid setup than trying to trade every single setup that you see, right? Because this was another mistake that I made. I would be hitting TP on 4 trades, and then I'll be hitting stop loss on 4 trades. So even though I went through all of this noise in the market and I waited days for my trades to play out, by the end of the week, I was breaking even, right? Just because you can trade 24/7 and the market's open, it doesn't mean that you should. I think you should stick to finding solid setups and you should stick on holding those setups for a longer period of time. For example, with the NZD USD trade we just looked at, if that trade was to continue to sell and go in that direction, that's 100 pips, right? If you trading a $2 per pip, that's $200 in one trade. If you're twin trading that trade, that's $400 that you made in one trade. So you don't have to jump around because you found a solid setup. You just have to hold, don't fold, and don't get caught up in the noise of the market. So I would say focus on finding more solid setups. And then once you find something that you trust, you can adjust your risk to that trade, right? You can adjust your risk to that trade. So, T, what's your question?
My question is, all right, I normally trade on the 15, but recently I was told that, is it true that I can get more pips if I trade on a 4-hour chart? If I take my trades on a 4-hour chart, will I get more pips trading on a 4-hour than the 15?
Wait, let me put you on mute. Could you mute yourself? Because I'm echoing. Not necessarily, because some people only take 5-minute setups, and I'm going to show you why that it doesn't really matter. It just, if you're trading on a time frame, the 15 and the 4-hour don't always have to have confluence, but it's better if they do. But if you're trading on the 15, stick to the 15 because, and I'm going to show you why. It doesn't matter what time frame you're on. It's just how long do you want to be in that trade. So I'm going to go, for example, if I look at this candle right here, wait, no, you said the 15. Because we get really long candles in the 15 sometimes. So I'm just looking for a big candle. All right, let's just say, for example, this candle. Info line. I'm going to go from the bottom of this candle to the top of this candle. Right? That's about 63 pips in 15 minutes from this one candle. Right? So we can see that it's not impossible to, y'all know the TPs I set be 40 pips and TP2 be 60 pips. Can you catch that in 15 minutes? Yes, you can. We see that from that example right there. Let me find another big candle. Here's another big candle. Let's look at this and let's see. Okay, that's 20 pips. That's not bad, but that's still in 15 minutes. If you get into that trade twice, you still caught 40 pips. Nothing wrong with that. Now I'm going to look at it on the 4-hour. And I'm going to look at another candle to see. And let me actually show y'all something too. Let me show y'all why this matters or doesn't matter. We're going to look at this candle right here because this is a long candle. And I'm going to do my info line. And this is a 4-hour candle. So that means that we're only looking at how many pips we caught in this one candle in 4 hours. 76 pips, right? So you can catch 76 pips. You can catch 60 pips in 15 minutes, or you can catch 60 pips in 4 hours, right? But you know that if you're looking at it on a longer time frame, if you were to hold that trade for longer, it's just about holding the trade, not really the time frame that you enter on, right? Because we just saw, even if we look at it, some people that I watch, they're 5-minute traders. If we looking at this on a 5-minute chart, that's 30 pips in 5 minutes, right? It's 30 pips in 5 minutes. So it just really comes down to, what is your TP? What is your stop loss, right? Because if I got into this candle and I got into this trade twice, that's still 60 pips in 5 minutes, right? But I would say if you have a time frame that you like to trade, just stick to that time frame. Just stick to that time frame, because if you try to look at it on the 4-hour and looking at it on the 15, and it's like, just stick to the time frame that you choose your trades on. So we're gonna look at this a little bit more in depth, right? And I'm gonna wrap it up shortly. So no, I need to go backwards. So I'm gonna look at a candle that has all the confirmations that we need, and then we're gonna do a zoom in, because I love those. So let's look at, we're gonna look at this candle right here, because this is a pretty big candle. I'm gonna put a box around it, because I'll do this sometimes too, because this candle has all the confirmations that we need, right? That's the 4-hour. So we only gonna pay attention to what's in that red box. So I'm gonna go to the 1-hour. So in the 1-hour, I can see that's everything that happened in the 4 hours, but I just broke it down, right? If I go to the 15-minute and I zoom out, I can still see everything that happened pretty much within that box. So it really, we can see that overall candle on the 4-hour was green, but even within that 4 hours, we can see we had a red candle here. We had a pullback. We had a pullback. We had a pullback. But if we would have just held that entire trade for the whole time, instead of getting nervous in that trade and coming out of it, we can see, based on the 4-hour chart, that the move continued to happen. Like, if we were just looking at this trade on the 15-minute, for example, you said you take your trades on the 15, and then you would have set your TP, you probably would have gotten nervous once the market started to do this. Because it's a pullback, right? It's a pullback. It looks like the market is about to turn around, but that's not what happened, because if we would have actually let the trade play out, we can see that the market actually continued to go up because of the confirmations that we had on the 4-hour. Does that make sense, y'all? Does that make sense? Drop a 7 in the chat. Like, the 4-hour is just giving you more information about what's happening overall. But the smaller time frame, that's what really makes up that 4-hour candle. So going back in retrospect, you can literally zoom in, and this is what I like to do when I'm practicing. I'll find those really big candles. Like, for example, if this was on a 4-hour, I would look at this really big candle, I will highlight that candle, and then I will zoom in. And zooming in, it really will take away some of that anxiety that you have, right? It will really take away that anxiety, because all you have to do literally is hold and not fold. But I like to look for candles where all my when I'm practicing and I'm back testing, I like to look for candles where all the confirmations are met. So, for example, if I would have gotten to this trade here, because I have all the confirmations. Wait, let's wait for a better candle, a cross down candle, because the more you see stuff, the more it makes sense. All right, this is a good candle, right? We had all the confirmations we needed. This is on the 4-hour. So let's do a zoom in on this candle. This is just back testing stuff that I do when I'm trying to be a better trader. Stuff I do. So hopefully it'll help you. So the 4-hour is sold, right? And in this one candle, this candle was 58 pips in 4 hours. That's not bad, because our TPs are typically 40 pips. My TPs are typically 40 pips. So we just gonna zoom into this candle and see what actually happened, and if we would have got anxious about the noise that was happening. So let's take it down to the 1-hour. Let's find our box. Where's that box, y'all? Oh, there it go, right there. So here we go. We're looking at it on the 1-hour, right? And we can see that's everything that happened in a 1-hour. We can also look at this on the 15. Sorry, y'all. This drawing mad back here. Okay, I know it's past that box. Okay, here we go. Perfect. Now I can zoom in and I can literally see everything that would have happened in that 4 hours. But if I was just staring at this trade and looking at this trade, look how anxious you would have been, because for a long time, this market was actually consolidating, right? So somebody would get nervous at this noise. If you're looking at this chart, for example, T, on a 15-minute, you would have been like, oh my God, this market not doing nothing. And this was the candle we would have entered on, because you would have been like, oh my God, I saw that it crossed under the EMA. Like, why is it doing this? But look what happens. If you would have got out of that trade because you was scared looking at it on the 15-minute, you would have missed, well, it didn't go all the way down there, but you pretty much would have missed this entire move, right? It only took one candle to break structure, right? But this is everything that happened within that 4 hours. So you would have had to sit through all this noise. You probably would have got out the trade early, or you probably would have took 6 pips instead of waiting to catch the full 60. So these are just things you have to play around with, right? Like sometimes I'll be thinking like it's really hard to explain my trading process, because it's so many little things that I'm looking for, but I'm putting everything I know into my analysis. Like this is why I don't drop 5 trades a week. This is why I'm not dropping 24/7. Like if y'all notice, I will only drop a trade in the chat and I will not drop a second trade until the first trade plays out, because we have to wait and see. We don't want to overtrade. We don't want to get anxious. We just want to let it play out. And the best way to, again, build your confidence is to backtest. Backtest just means go back in the market, compare everything I'm saying. Look when I'm backtesting, I look for specific trades that have already played out, right? And that have all the confirmations that I'm looking for. For example, right here, I can see this. I could have entered here. This would have been a good trade idea because it's under both EMAs, under 0, facing down. And then I look and I see, okay, let me look at this bigger and see, okay, what happened? Like, would I have been nervous? Would I have taken this trade? But it played out, right? Backtesting is important because it shows you what I'm teaching or telling you has actually played out so many times before. So if you see these same confirmations happening in real time, don't get anxious. Don't get nervous. Just let the trade play out. Don't check your trade. Put your phone down. You're going to give yourself a headache. Like, you're going to stress yourself out because you're going to get caught in the noise. You're going to get caught in this noise just for the market to break and it actually continue to sell. Like, that's happened to me so many times where I just get caught in the middle. I'm looking at the trade. Is 1 pip from stop loss, so I just close it just for the trade in the very next candle to turn around. But that's what the market does. That is what liquidity is about. They're scaring people out of the trade so that they can make the real move, right? They're scaring people out so that they can make the real move. Like, if you just gotta watch the liquidity video, because I'll just keep talking forever. But that's all I have to say for today, y'all. I really hope that this video brought some clarity into how you're going to be trading. I will take one final question if somebody wants to ask something else. It's so many little things that go into trading, but once you understand the bigger picture, it just becomes so simpler. Like, don't stress yourself out. Trade what you see. If you're wrong, you're wrong. So what? As long as you're not wrong 10 out of 10 times, you're fine. Like, as long as you're right 6 out of 10 times, you're great. My EMA settings are, hold on. So for the one EMA is 50. And you just change the method from smooth to EMA. So that's the only 2 things I change. I changed the length to 50 and the method to smooth. And then for the second EMA, I just changed the length to 200 and again, the method to EMA. So yeah, guys, we just got to learn to trust our trades. Again, trade what you see, not what you want. Like, you may be looking for a sell, but then it's currently a green candle. So what? Do you have all the confirmations you need for a sell? Like, just take it. If the trade has stop loss, so what? You're going to live to trade another day. If the trade has stop loss, so what? Like, it's not the end of the world. And then you can look back and see what you did wrong. If the trade hit TP, cool, your analysis was correct. Are you going to be right every time? No. Am I going to be right every time? Absolutely not. Absolutely not. I don't expect to be right every time. I just expect to be right a lot. right? I want to have a great win rate. I don't want to be 100% win. It just is impossible. So if you take a loss on a trade and you just getting your feelings is literally pointless. It doesn't make any sense unless you plan to quit trading. Simply put, get over it. Get over it, because if you're using proper risk management, you should not have lost that much, and you literally calculated your risk before you got into the trade. And just because you set a stop loss, that doesn't mean that you have accepted the risk. If you're continuously looking at your trade, continuously picking up your phone, you're going to stress yourself out, and you're going to take a lot of shorts on a lot of trades simply because you couldn't let the trade play out. I'm pretty sure it's somebody in this chat right now who has took a short on a trade just for the trade to turn around and go in your favor just because you didn't let it play out, right? And I know it's somebody on this chat because that has been me, right? The reason why I'm able to pinpoint and do these trades is because I'm taking more time to think about my trades. I'm not chasing setups. I'm not checking my trades the way I used to. I told y'all this the other day, lose sleep, be driving and trading, just everything, because it's like I just had to look, is it in profit? Is it in profit? I can't do that anymore. I tell my friend all the time, we have to trade the way we really want to trade in the future, not trade the way we trading right now. If you feel like this is something that you really want to be a passive income and not something that's stressing you out and causing anxiety, why are you letting it cause you anxiety right now? Trade the way you want to trade when you're rich. You want to put in a few trades for the week or for the month, and then you want to go about your life and collect your coins. You don't want to be stressing about this. That defeats the purpose, right? So the last tip I'll give y'all, just to wrap it up on that, if you marked up your chart, and this isn't a real trade, y'all, this is just an example. So let's just say my entry point was here, my TP was there, and my stop loss was up here. I'm just making stuff up. Use alerts, right? So we're gonna set an alert. Oh, not in replay mode. Okay, let's turn this off. Yes. Alert, right? It's very simple. For example, if the currency pair is AUD-USD, ASD-USD crossing, whatever this number is, once it crossed that number, we're going to set the alert as TP hit, for example, and then it could say whatever you want it to say. You could say, your money was made. So then create. Once the market does that thing, whether that's your stop loss or TP, see, look, you're going to get an alert. It's going to come to you. It's going to come to your email. It's going to come to your TradingView app, and you're going to know, so you don't have to check it. That's the joy of trading. Like, it's supposed to be a set it and forget it thing, not a I'm raising my blood pressure, stressing out and losing sleep thing. That's out the way. We're not doing that no more. So the alert will let you know what is going on with your trade. So if you feel anxious, set an alert for your stop loss, set an alert for your TP, set an alert when the trade is 10 minutes from your stop loss. 10 pips from your stop loss. Set an alert when the trade is 10 pips to your TP. And just go by that, right? So again, I really hope that this was helpful. I'm going to pack it up, y'all. If y'all have any more questions, feel free to text me, drop questions in the chat. And again, look out for the trade ideas, because I want to have another profitable week. So good night, everyone. I will post this video tonight when it finishes processing, and I will catch y'all in the chat.